Barry Ritholtz, thanks so much for chatting with me. It's been a while since we've sat down together. You just came out with a new book, How Not to Invest, which I imagine is something people are thinking about a lot right now. Trump announced across the board tariffs on April 2nd, many more than we were expecting. And we've seen the stock market respond tremendously. Today, I've seen the S&P is already down about 5%. Because Trump's gone back and forth on these tariffs, right? And so I think maybe some people were holding out, expecting he would call them off. It doesn't look like that now. And I think a lot of people are wondering who aren't investment minded, maybe they don't manage their own investments, and they don't quite understand why this tariff policy is affecting the US stock market so much. What would you say to those people?
So think about what the stock market actually is. The stock market is essentially a future cash flow discounting model. And in English, let me translate that. Hey, what's the value of these companies going to be in a year? Well, here's what we expect their revenue to be, and here's what we expect their profit to be. And then we come up with some multiple. We're enthusiastic about the economic background, the market background. So we put a slightly higher times 15 or times 20 to the profits. And that's how you end up with the valuation of the market. And so you're making these collective judgments about where prices will be, where profits will be, and what the crowd psychology will be a year in advance. And while Trump has, for his entire adult life, been enamored with tariffs, he calls himself Tariff Man. He ran on tariffs, and I think Wall Street supported him because Wall Street loves the idea of, hey, a business friendly environment, an FTC that's not going to be doing antitrust enforcement, lower taxes, less regulation. Where do we sign up for that? Says Wall Street. And then what actually happened is after he got elected, what turned around was, all right, tariffs on again, off again, on again, off again. This is just a negotiating tactic. He's not really serious. We can live with a little bit of confusion, and it's all negotiating tactics. And then Liberation Day comes, and we've all been liberated from a big part of our 401ks. Suddenly, it's not a negotiating tactic. It's not a strategy. It's no, we're going to go back to the way things were in the 1800s because those were the glory days of America, and we want to make America wealthy again. And everyone is kind of, if your viewers are confused by the methodology and the purposes of this, so is everybody else. It doesn't make any rational sense. How is Vietnam ever going to have a zero trade deficit with the United States? If everybody in Vietnam took every penny they earned and bought goods from America, they're still not going to close a deficit. We're a giant country, the biggest economy in the world with 20% of global GDP. None of these countries could really make a dent. You think of Vietnam, it's like, what is Mississippi's trade deficit with Europe? What is Utah's trade deficit with Asia? It just doesn't make any sense. And I can sum it up simply by saying we put tariffs on penguins in Antarctica. That kind of gives you an insight to the degree of sophistication and thoughtfulness that apparently went into this chat GPT formula, which has been demonstrated where this formula came from. It's haphazard, it's opaque. We could talk about how the goals have changed repeatedly, but overall, if you're confused, hey, that just means you're paying attention. Everybody is confused. None of this makes any rational sense. It's what Trump has always wanted to do, regardless of his lack of understanding of global trade, economics, alliances, etc.
Yeah, it's three Ford F-150s for every one Vietnamese person, right, Barry? That's what we need to see
Insane.
happen.
It's right. So when you think about this, It's if you're not confused, then you're deluding yourself.
Yeah. Yeah, let's actually talk about the goals changing. Initially, tariffs were talked about by Trump in a way of we're bringing manufacturing home to US soil. Now, I've seen this chart go around a lot, but it's the share of US jobs that are manufacturing jobs since 1947. And you see that it's been a steady decline since the 50s. Now, a lot of people point to NAFTA or China joining the World Trade Organization as the triggers to manufacturing jobs leaving the United States. The chart seems to tell a story that it's been a trend over time. Do you think there's any hope that these tariffs bring manufacturing jobs back to the United States? And do you think that's a narrative they're going to cling on to?
So, let's talk about narrative shopping first, the explanation for this, and then we'll talk about this what the U.S. economy is. So, Ben Hunt over at Epsilon Theory does this fascinating, deep analytical structure where he's looking at various substacks and blogs and news outlets and social media, and they scrape off keywords. They're looking for linguistic markers, semantic signatures about different subjects. And they create a baseline to identify how these phrases are used by the president, by his then candidate Trump, throughout the election process. And what we saw before um, he won the election, a lot of talk about protecting domestic industry. Hey, you would say that if you were interested in winning votes in Michigan and Wisconsin and Ohio. A lot of talk about pressuring neighbors to secure borders. Hey, I guess if you're focusing on New Mexico and Arizona and Florida, arguably, and Texas, you say that. And then there's some conversation about reshoring manufacturing, which is a long process. But then after the election, we start to hear more about replacing the income tax and lowering other tariffs and then getting other countries to pay for their defense share. And it very much seems like, and I'll share this chart, Ben's chart with you. It very much seems like this is a policy in search of a rationalization, in search of an explanation. And it just looks like these are endless trial balloons. Let's figure out what sticks, and then we'll go with that. So that's part A, and that's pretty obvious that we don't really know what this is about. We could delve into the details of how this America's economic success is distributed to its population, but it's hard to argue we're not the suckers. We're not America as a country aren't the losers. It's the strongest economy in the world. It's the greatest amount of wealth creation from World War II to April 2nd that the world has ever seen. The U.S. was the envy of the world. Now, we have lots of problems. A lot of that wealth has found its way to the top, fill in the blank, 10%, 1%, 0.01%. We have an ongoing issue with a lack of healthcare, with medical costs, with education and college costs. So I'm not pretending the United States doesn't have a ton of problems, but this seems sort of bizarre because this isn't going to address any of those problems. All right, maybe you can secure the borders in Texas. Maybe you can try and protect existing U.S. manufacturing. But let's talk about the U.S. economy for a minute. For the past, I don't know, let's call it 50 years, the U.S. economy has shifted. First, we were doing complex. First, we were doing simple manufacturing and, of course, agriculture. Then we started doing more complicated manufacturing. And as we've moved up market, well, we've taken the simplest manufacturing and offshored it because why are we paying people $20 an hour to make, basic clothes? And we're not going to make hosiery or underwear here anymore. We're not going to do basic furniture assembly here. Like the easiest, lowest cost stuff has been outsourced. Now, capitalism being capitalism, always goes too far. It's just the nature of it. If there aren't guardrails, well, that's how you get child labor and slavery without some guide rail to say, hey, I understand that's efficient and profitable, but we need to, it's not ethical and it's not healthy, and we need to cut that out. So you need some sort of guardrails. And the pandemic very much revealed, wait, we can't make masks. We can't make basic masks. We can't make simple protective clothing for doctors. From a national security perspective, we need to have some degree of our own in-house ability to manufacture this. So some reshoring has come up. It certainly makes sense that you shouldn't be totally dependent on China for everything. And so you end up with a set of circumstances that, all right, we've gone too far looking for the lowest common producer. And there are ways around that. There are ways to incentivize companies to make certain things in the United States. We saw that in the Semiconductor Act. We saw that in the infrastructure bill. We've seen it in all of the incentives for EVs and electric vehicles and either low emission or zero emission vehicles. So most countries have an industrial policy. The US hasn't recently. And so if you want more of this, well, then you need to create a certain level of incentives for the companies to not simply go to the cheapest labor source, but we need to build certain things here. Keep in mind, the U.S. was an agrarian economy. It became a manufacturing economy. Then it became a services economy. And now we've moved to a digital information tech economy. Tariffs kind of are ignoring that 100-year transition. We don't make shoes and clothes here anymore because it just doesn't make sense. We could put our labor force and factories and everything else to better use by making more complicated, more profitable, more sophisticated products with a high level of intellectual property. The tariffs kind of gloss over that. And by the way, all the trade deals we've made over the past 30, 40 years have very particularly been adjusted to recognize American intellectual property and American prowess. There's a separate issue that China cheats on those deals, and that's very specific to China. There's no doubt they're a bad player, and we need to do something about it. But this should really be managed with a scalpel, not a chainsaw. And that seems to be why the market is reacting the way it's reacting.
What's your suspicion now as to what Trump's goal is?
I don't think anyone has a real handle on his motivations and thought process. He has been a fan of tariffs his whole life. I don't understand why, but I didn't grow up in a wealthy family. I didn't inherit a lot of money. I haven't run a lot of businesses that have been forced to declare bankruptcy. So this is kind of like it's really hard for me to imagine his thought process other than he seems to be all over the place. And, not only are the goals of the tariffs so ill-defined, but, think about how the Federal Reserve informs the market of what it's going to do. Before rates started to get hiked, there were warnings, there were recognitions. We have to deal with inflation. We have to deal with this. We have to deal with that. And eventually the Fed does what they do, kind of eases their way into what they're doing, so as to not surprise and shock and disrupt the market. And the same thing with the cuts. We're following the data. We're looking at these things. We expect that later this year we'll start cutting rates, and eventually that happens. The idea is to whatever changes the market's going to make, it adjusts whatever thought process people have. You want to make those adjustments. You want to make those announcements in a way that's transparent, clear. The goals are understood. The methodology is understood. Here's what we want to do. Here's how we're going to do it. Here's when we're going to do it. Everybody's on the same page. That really seems to be missing from President Trump's tariff plan. We heard about Liberation Day. We didn't really know what that means. We didn't really like what it just seems that this whole thing has been very clumsy and chaotic, opaque, and not a surprise the markets are reacting the way they are. When you shock the markets, they have to go back to here's our best estimates of future profits and what the state of the economy is going to be. You have now pulled the rug out from that. Everything is going to be more expensive. Consumers are going to have less discretionary money to spend on things. We're lowering our estimates of consumer spending, employment, wage gains. If companies are paying more for input costs, they're going to have that much less money to pay for gains. We're going to drop GDP, depending on the estimate you look at, 50, 75, 100, 125 basis points. And we're going to lower expectations for the market by 20%. And so we're in the process of working through that right now.
And does this change anything in your book? Does your book have any sort of advice for a scenario where the US president tariffs literally everyone in the world? Did you consider this, Barry?
No, I did not consider a 19th century self-inflicted error that wasn't there. But I did talk about how nobody knows what's going to happen in the future, and I brought in examples. I brought in examples from film and from music and from movies and from real estate and from the world of hedge funds. And, we really don't understand what's happening here and now. And we certainly don't know what the future is going to be like. The good news is, hey, if you're not retiring for 10, 20 years, this will just be a distant bad memory and you'll be fine on the other side. If you're retiring in 2025, 2026, this is a challenge because suddenly you thought you had this much money and now you have this much money. And so my heart goes out for people who we're hoping to either buy a house this year or send their kids to college. Like suddenly 401ks and 529s are worth 10, 15, 20% less. That's real money. If you have a long enough time horizon, you'll be fine. If you're retiring over the next 18, 24, 36 months, this is going to sting. It just feels so self-inflicted and avoidable. My best case scenario is, hey, there's going to be a bunch of side deals cut and he'll be speaking to the UK and he'll speak to Japan and Korea and this will all work out. That's one part probability and four parts wishful thinking. They keep coming out and saying, no, we're not cutting deals. These are the tariffs. So we'll find out soon enough if this was just, if they were serious or if this is just a temporary tactical approach to thinking about how to realign the global order when it comes to alliances, trade, and the whole global economy. The market has initially given this a big thumbs down. We're waiting to hear. By the way, we had a big speech recently from him 2 weeks ago. This wasn't really laid out in this way. Again, after that speech, people kind of said, okay, we have an idea what he's doing. And investors and economists and everybody else said, based on this speech to both houses of Congress and to the American public, we think we see where this is going. It's pretty clear that a lot was left out of that speech, and that's why you are getting such a shocking reaction from markets. I think that there is an increased probability. In the beginning of the year, I had recession risk at about 10%. Now it's 50-50. We could be in a recession, today for all we know. I'm the Atlanta GDP now. Some of the nowcasting already has us down 2, 3, 4%, depending on which one you look in GDP. Not that that's the definition of recession, but you never want to see an economic contraction suddenly come out of the blue. We're starting to see all the soft data, the surveys, consumer sentiment, CFO hiring plans, company capex plans, those sentiment data have all flipped negative. But, consumer sentiment has been negative for the past 5 years and people kept spending. We're now starting to see the soft data roll into hard data. And what I mean by that is look at some of the companies that have pre-announced either bad earnings or lowered guidance or both. The two big surprises is Delta, biggest airline in the United States, said they're seeing decreased bookings in the future, which makes sense. Hey, I don't know if I'm going to get a bonus this year. I don't know if I'm going to get a raise. I don't know if I'm going to have a job. Honey, maybe now's not the time to book that vacation to Disneyland. Let's hold off on that. So you're starting to see those things bleed in. And then if you're running a company and you have to build a plant or figure out how many people you're going to hire, or is now the time to do a big software update? Hey, we don't know what's going to happen with our revenue. We don't know what's going to happen with our taxes, with the tariffs. Like everybody kind of freezes in place. And so you immediately see a decrease in spending, and that will take a few months to show up. So we're starting to see that. FedEx is another company that pre-announced and said consumers are shipping less packages. All right, so if people are booking less discretionary travel, if consumers are buying fewer goods, if companies are reducing their hiring plans and reducing their spending plans, that's not necessarily a recession. Hey, maybe we go from 3% growth to 1% growth, still expanding, just much slower. We're a little less wealthy, a little less good of an economy, not a recession. It depends on how long that goes for, how deep that goes, and that'll let us know what the world is going to be like. I think it's going to take a few weeks or months to see how this plays out, but it's obvious that, Trump inherited a very robust economy that had suffered through some high inflation that had come down. His election very much was a combination of a vote on Biden and Harris personally and unhappiness with increased prices, especially in the grocery store. This doesn't help any of those things. And, I keep hearing people say this isn't what we voted for. I kind of think it is what you voted for, because he's been talking about these things for years, decades. And, he seems to be serious about it. So we'll get a little bit of a bounce in the market today. We'll see if it's sustainable. The worst thing that can happen is the market bounces a percent or two, then rolls over and sells off. Technically, that's a really negative thing. It means there's just no appetite for buying and there's more downside. You can't go straight down or straight up. There's got to be some relief, but we'll see. We'll see what happens.
I always feel like I understand the world a little bit better after we chat. Barry Ritholtz. Ritholtz.com is where you can find a lot of his recent work. The Sunday reading list is always fire. I always check up on that, Barry. And How Not to Invest, your book that just came out. You're a great resource for anyone trying to understand the economy and financial world a little bit better. So really appreciate you coming on and breaking this down.
Well, thank you so much for having me. I hope we didn't get too technical in the weeds with a lot of this. It's complex. It's confusing. The good news is we'll get through it.